to TradeSpoon. My name is Lark Carpel. I'm CEO and founder of TradeSpoon, and today I'd like to go over current market conditions and trade of the day, what to expect short-term, long-term, and what are my favorite strategies. Also going to go through the trade of the day. Disclosures are very important since I'm going to go through specific trading examples, so please read the disclosures. I encourage you to pause the screen if you need more time to read. Also, if you have never read risk of standardized options, I encourage you to do that at optionsclearing.com. All right, let's take a look. First, I'm looking at the stock forecast toolbox. This is one of our key models. Very good for current market conditions. It basically looks at the just price action. Doesn't look at any fundamental data. Looks at the price action, long-term and short-term. So this is the 10-day period. Looking at the spiders. Basically showing 407 is your support, 421 is overhead the resistance. We're currently trading at 408. At 407, I would consider buying. 420, I would consider raising cash. Bulls are still controlled. So positive trend for the next 10 days. We had ECB decision. Looks like not a lot of price action as a result of that. And the market is slightly lower. We have CPI data tomorrow, and then Fed meeting next week. Same model. Now we're looking at the 6 months prediction. What's the difference between 10-day and 6 months? In terms of data input, each data input into the model is basically 1 month of data. Basically showing for the months of June and July, you can expect market either reaching 440 or 430 level. I agree with the model. And then going into August, retesting the 380 level and eventually breaking 380 level in the next 6 months. I agree with the model also. I think all the news aside, assuming there is no black swan events or any new information where inflation is getting a lot worse than everybody expected, or escalation in the conflict in Russia, Ukraine, that's not figured into the input of the model. But assuming everything else staying the same, the path of least resistance is short-term to continue going higher, long-term to continue going lower. I agree with the model. After the ECB decision, a lot of price action in the 10-year. We had a pretty steep pullback to 2.7, rally to 3.05, potentially 3.2. I would watch the 10-year yield. I think if we break through the 3.2 tomorrow on the CPI data, then short-term, I think market will pull back more than I expect, potentially even retesting the 380 level. If it stays below 320, if the dollar also stays within this range between 105 and 101, I think that would be bullish for the market. So still CPI data, inflation decision, Fed decision next week. Expect more volatility. I'm bullish on the market short term. I'm added to my FCX position, 35-40 call spread. I also have a stock if you're not feeling comfortable. Long copper and miners going into end of June, beginning of July, more middle of July. You can see model still shows a strong uptrend in FCX. And finally, we have a lot of free content on YouTube. So do me a favor, sign up. We're trying to get to 1,000 subscribers. Search for TradeSpoon, click on subscribe. We have a lot of videos on psychology. We have videos on trading plan. We have every Wednesday, we have a morning bell and a closing bell. So I encourage you to participate live. And if you like any of the content, then you can always share with your own friends and family. That's all I have for today, and thank you very much.